My name is Howard Burns. I'm the editor of NJBIZ. Welcome to our monthly panel session. This month, the topic is health insurance.
We have a very, very distinguished panel to my right who will hopefully give you some answers and some good dialogue as far as what's happening and what will happen, what has happened, and all the good things in between.
I think it's safe to say that any effort to repeal and replace is gone. The House is certainly not going to pass anything that would repeal the Affordable Care Act. I think that there is room for common ground legislation to pass. I think that there's a lot of movement around what we've seen here locally in New Jersey on the national level with out-of-network bills and surprise billing. There's a lot of movement around that, and that's a nonpartisan issue. Everybody has constituents that go to the doctor. So there will be some movement there, but large-scale repeal and replace is dead. We will not see that at all in the next 2 years, in my opinion.
Conceptually speaking, we all agree that these models are absolutely what the marketplace, providers, and consumers need. It will result in better access to care, more timely delivery of care, as well as hopefully better patient outcomes. All right. The flip is you have consumers that have choice. Okay, so it depends on the market that we're also talking about, whether it's the commercial space, small group, whether it's the Medicaid space or the Medicare space. And then the successful engagement of a consumer to then say, oh, let me also be proactive in my self-management. Let me respond to a piece of mail that I get. Let me call my doctor's office back when they call me and say, hey, have you actively been taking your insulin, to manage your diabetes appropriately? And having that level of consumer engagement is the flip of these programs that are required in order to have a successful program and to have these kind of alternative payment models work. And without that, we're going to have to, face problems. Is the long and short of it.
I think it's a great idea. All of these shared savings programs. I'm not sure if everyone is aware, so certain things like bundling or direct to primary care, it's basically the provider saying, I'm going to set my price. It won't be fee for service. It'll be, one rate, and then it's like an all-in rate. And so the idea is a fantastic idea. When you look at all the trend surveys, they talk about where is the trend coming from for healthcare. And it's coming from price. It's not coming from utilization. So the path towards having the shared risk where the provider says, I'm aligned with you, right? I'm not going to just do more services to get paid more. I'm going to put my fees at risk. And if I get that right, then it's a good thing for both of us. I think that really is the key to control. It also keeps healthcare local. And so, when you think about keeping, most of your services within a community in New Jersey with certain integrated delivery systems, it's a great idea. So you don't have services that are traveling outside the state. They're all within the area. Healthcare is local, and I think this shared savings path is a good one.
So I'm going to give a classic consulting answer. Yes and no.
That's great.
So
nicely done.
Conceptually speaking, we all agree that these models are absolutely what the marketplace, providers, and consumers need. It will result in better access to care, more timely delivery of care, as well as hopefully better patient outcomes. All right. The flip is you have consumers that have choice. Okay, so it depends on the market that we're also talking about, whether it's the commercial space, small group, whether it's the Medicaid space or the Medicare space. And then the successful engagement of a consumer to then say, oh, let me also be proactive in my self-management. Let me respond to a piece of mail that I get. Let me call my doctor's office back when they call me and say, hey, have you actively been taking your insulin, to manage your diabetes appropriately? And having that level of consumer engagement is the flip of these programs that are required in order to have a successful program and to have these kind of alternative payment models work. And without that, we're going to have to, face problems. Is the long and short of it.
And just to piggyback on that, so beyond member engagement, which I'm sure we'll get to a little bit later in the panel, the ACA has really served as a catalyst for change in terms of how providers and payers are talking. So in the past, a couple years ago, the conversations were strictly just around price. Now we're seeing that providers and payers are really coming together to work together, to collaborate, to come together and figure out common goals to be able to impact the outcome of care. AmeriHealth New Jersey offers tiered products that we've worked closely with different providers and hospitals throughout the state. These plans work well for our consumer members, where 85% of the membership is enrolled in one of these plans. And they love these plans because they're able to visit providers in their local communities that are flagged as Tier 1. And when they go to these Tier 1 doctors, they pay lower copays and out-of-pocket costs. But they also have the ability to visit doctors throughout the entire state as well.
So this conversation is great because basically we're circling around a point that I think we're all may agree with, is this concept of aligned incentives, right? That's really what we're talking about here, is how do you get, yourself as the consumer to have the same kind of, let's be honest, financial incentives as your primary care providers, your insurer, your employer, right? Because that's who's footing the bill in a lot of the times, to all say, okay, it's no longer just them paying the bill on my behalf and I can do whatever it is that I want. Fundamentally, the costs that you incur ultimately do come back to you. So if you are better and more proactive in self-management, in saying, oh, geez, should I have lifted that heavy box that throughout my disc, or should I have tried something different? It all kind of will culminate in this collective improvement to the system and ultimately to the bottom line and better outcomes and better patient care.
I think it was 2007 was the first time I saw any sort of telemedicine. I was watching a show, it was on Extreme RVs, and Simon Cowell had a trailer for American Idol where he had a corporate teleconferencing set up directly to his doctor's office with a glove that had an EKG in it. They explained that, and this was 2007, I'm pretty sure it was. Now we're at a point where you can go online and for $100 you can buy a Bluetooth EKG, and that, or you can go buy an Apple Watch that's got high definition heart rate monitoring inside it. That technology, combined with the ease and the penetration of mobile phones, I think is going to make a huge difference on the chronic users in terms of managing care. Beyond, I've got kids, beyond the pink eye telemedicine calls, which are a godsend, the chronic care, I think, is going to benefit the most by the cheap access to technology.
Part of the fundamental issue at play here isn't necessarily the concept of reference-based pricing. It's a larger issue of we actually just have a pricing problem for healthcare in America. That's the larger issue at play here. More or less, more carriers, more payers, more providers, everything stems off of basics of some point of the Medicare system in some way, shape, or form. So, that's Medicare Market Basket, that's MedPAC. There's a whole host of policy implications that drive the pricing system that exists in this country. And then you have the regional pricing that's going on. I don't know if anybody pays attention to what's going on in the news, but for instance, the New York Presbyterian system in New York City is having a major public fight with Empire over the pricing of its healthcare, and a large union is actually standing on the same side of the insurance company and pointing out at the hospital saying, you cost $25,000 more, $50,000 more on average for the same procedure as the same guy down the block. So again, I think it's a larger issue at play for pricing. I don't think there's one kind of magic silver bullet that's going to cure how we pay providers and incentivize them. It's a larger discussion at play here.
I think that the employer-based model is in severe jeopardy. Congress, every year, somebody will float a proposal to take away the employer exclusion so that every dollar that goes towards providing health benefits would be taxed as income. People that are proponents of that say that would drive employers to continue to do exactly what they're doing at a higher cost than just fund the government. I think we would see the opposite happen. I think employers would curtail coverage pretty quickly, and people would be dumped into the market without their plans. But unless we get pricing under control, we will reach a point where employers will no longer be able to afford it. You can only take so many double-digit increases before it stops making sense as an employer to offer that as a part of your benefits component. And so I think we need to have drastic structural changes to protect it, and it's not going to be just the tax code. It's going to be what we were talking about earlier with provider pricing. It's got to be addressed, or it will be unsustainable. CREATE
is a self-insured plan. There is really a focus in terms of going insured, and if you're large enough, go self-insured. There's so many financial and philosophical reasons to go self-insured. There's also a very robust stop-loss market. So if you're worried about, you have one employee who's very sick, blowing the, claims for everyone, there's ways to protect around that. I think there's greater flexibility with self-insured plans, and I quite frankly don't think you're going to see more insured health plans. I think you'll see a continuation of self-insured options in New Jersey.
So as a health insurance carrier, our primary focus is affordability and market stability. AmeriHealth New Jersey has been participating on the exchange. It'll be our 6th consecutive year. So despite some of the insurers across the entire nation that have been leaving the market, we've truly been dedicated to participating on the federal exchange.
So I think in New Jersey, you need to have 50 eligible employees to qualify for stop loss, which is the basis for being self-insured. Brokers are very, very well versed. We have a level funded product that works really well. And I think it's just a matter of, running some numbers with your brokers. What is the worst case scenario? And when I look at that worst case scenario, let me take a look at it versus fully insured. Is there still value? Does the return outweigh sort of the risk involved? I would take a look at all the numbers and also look at the future. Think about 3 years from now, 5 years from now. You want to provide solid benefits, possibly to your employees at an affordable rate. Where will you be as a business 5 years from now? Are you going to grow? Are you going to shrink? What are your goals? And being self-insured just gives you more latitude than being fully insured, if you have the size and risk tolerance.
So as an organization that is dedicated to improving the wellness of our members, we do offer a wellness program to all of our members that we do encourage them to take advantage of. So in the past, your health insurance company really was just there to pay claims and send you your monthly invoice, collect payment, and then send you a renewal at the end of the year. And you really didn't hear much from us aside from that. But looking now, years later, as I mentioned earlier, the ACA really has served as a catalyst for change. So we're really engaging with our members on a completely different level. We're nurturing the relationship with them throughout the year. So we have regular touch points with them on a monthly basis. 70% of our consumer membership is actually digitally engaged with us, where that then gives us the ability to send them messages about wellness, whether it's, encouraging them to enroll in our wellness program or advising them that they're due for some sort of a wellness visit. We also send reminders on preventive mammograms and colonoscopies. So I think the engagement with the carrier and the member has really changed and centered around wellness, because most folks just tend to think about their insurance when they really need it, and then when they do need it, they really, really need it. So we're really just trying to get out ahead of it and getting in touch with our members throughout the year and just really working on empowering them and giving them the tools that they need to be able to take ownership of their wellness.
I want to thank the panel this morning for your wonderful job. Thank you very much and have a great day.